All right. Good morning, everyone. Welcome, new faces this morning. I'm Julie Secord. I'm the director for the Council on Aging. This is Megan, and Megan is Communications and Community Relations and in charge of Zoom today. We thank you very much. Joining us for many years has been Brian Lynch from the Department of Revenue. And I'll tell you, there isn't a moment when I look at your face and say, you are Mr. Circuit Breaker. And this is the most incredible tax credit. And I'm so glad to see some new faces looking, because with the Wayland's County map, it's so valuable. But you need to file your state return to be able to access the match from the town. So I will turn the program over to Brian. And after, Brian will explain about the state circuit breaker, and then we will have representatives from the Wayland Assessor's Office that will answer other questions that you have about other forms of tax relief.
Thank you, Julie. It's a pleasure to be here. As Julie mentioned, I've been coming to Wayland for many years. I wonder how many it has been. A lot.
40.
Not that many, but it's been a lot. And I really enjoy it. Julie makes it very easy. She always checks in with me, make sure I have the directions. She's great at what she does. She does a wonderful job. Beautiful town here in Wayland. Love it out here. Wish I could live here. Beautiful community center. This is awesome. So nice, right? Better than our old spot, Julie, at the town.
Oh, the hallway?
In the hallway.
Yes.
Yeah, this is really nice. So thank you, everybody, for coming out. I'm Brian Lynch. I work for the Mass Department of Revenue, which is the state tax agency. So we know that IRS is federal, DOR, where I am, is state. So I work for the Commonwealth of Mass. We're going to talk about a tax credit available to folks that are 65 or older in Massachusetts. It's been around for 25 years. For some people, it might be new, like maybe you've just heard about it or just learning about it. Especially if you're just becoming 65, you have no reason to be really aware of it before. But as Julie said, it's very valuable, especially in Wayland, because the town of Wayland will match whatever your circuit breaker credit is with the state. Good morning. Hi.
Right.
You're going to get a match with the town of Wayland, which is very unusual. I think there's one other town that has it. I live in Milton, and there's been conversation about maybe getting, I don't think they would match it in full, but there's conversation that they maybe could do like 50% match of what the circuit breaker is on your state return. So, but I think that has to pass town meeting this spring. So it's kind of in conversation right now. So kind of a funny name, circuit breaker. People always say, like, honestly, I have no control over it. I wish that we could just call it the senior real estate tax credit, and then people would kind of know, they would be able to relate and know what we're talking about. But when we say circuit breaker, I had one time a woman call me and she said, my husband's an electrician. Is there anything available for us that can help us out on our tax return? And I said, no, sorry. It's a little misleading, right? Kind of a crazy name. And Massachusetts is not the only state that has the circuit breaker credit. There are other states, and many, not as up to half, but there are many states that have the credit available to seniors. So the first criteria that you need, good morning, is you need to be 65 or older by December 31st of the tax year. If you file together with your spouse, as long as one spouse is 65 or older by the end of the tax year, then you're okay. But you can file married joint and you'd be eligible and qualify for that. There's also some income eligibility, which we're going to look at and we're going to talk about right now. So I have a handout as well. And do you guys want to introduce yourself? Oh, are you with the town?
Yes.
Okay, great. I know that.
Yeah.
Okay. So we're fortunate this morning. I'm going to talk about the state tax credit, and then after I do my spiel, then we have some folks from the town of Wayland. You're with the assessor's office?
Yes.
Yes. Excellent. Okay, great. So the assessors are going to talk about how the match works with the town of Wayland and the deadlines and how to take advantage of that, which is great. I'm glad that you guys were able to come out today. So let me just pass out my handout and follow along.
Thank you.
You're welcome. So when you look at it initially, there's a lot of numbers. So don't be thrown off, like don't be intimidated by all the numbers on the page, because we're going to walk through it, and you're going to really have a pretty good understanding after the presentation. I think you're really going to know what it's all about. And okay, thank you. Please feel free to ask questions. And then even I do have extra handouts as well. So if you have neighbors or maybe a friend or a relative that you think might be interested, you can take a handout home with you to kind of let them know. Because usually at the end of the presentation, I always end by saying, please share the information with your family, friends, and neighbors. Because sometimes it's kind of an unknown credit or benefit. There does seem to be more awareness about it recently, which I think is great. But years ago, when we first started to do this, people kind of really weren't familiar, and they'd be like, what are you talking about? So on my handout, I have a few tax years. So in the right-hand column, we're going to start off on the right-hand column and talk about tax year of 2025. Because right now, everyone is working on their tax return, I hope, for tax year of 2025. I should preface and say that if you go to a tax professional to have your tax return done, they are very familiar with this credit. It would be no surprise to anyone that does taxes for a living. This credit has been in place through the Commonwealth of Mass for 25 years.
Is that include the AARP volunteers who come to the senior center?
Definitely, even more so than an average tax preparer.
All right.
So if you're able to benefit by the free preparation through AARP, which it is available here through the center, Julie told me that they do offer that service, which is terrific. And if you're listening at home, maybe I would make an appointment after the presentation, because like anything that's free, it fills up quickly. And Julie, did you say like the first month is kind of filled?
We have very few openings in February,
Okay.
but we are doing them right through to mid-April.
Okay, awesome. So take advantage of that. But to answer your question, the AARP folks are very familiar with this.
Okay.
This is their audience. They're in AARP, they're very well trained, they're very confident people. You can feel very comfortable having your tax return done with the here at the center with the AARP folks. They work together like in tandem. So if I prepare your return, it's going to be reviewed by my partner that we work together, and you check my work and vice versa. So that's how they operate. So you can feel very comfortable with that. Let's talk about, again, back to my handout in the right-hand column. Oh, thank you. For tax year of 2025, the maximum credit for this year is $2,280, which is pretty significant, right? This money is allocated by the legislature every year. And you can see in the past few years that the credit has increased. And it was a big jump from tax year of 2022 to tax year of 2023. It really more than doubled that year. This is the maximum amount that's available. And not to say that everyone's going to get the maximum. I wish I could say that. But everyone has different income, and everyone pays different real estate tax. And this credit is a combination, or like kind of a proration of that. And we're going to talk about the formula and how to calculate your credit right now. So everyone's credit basically is going to be different. Again, because everyone has different income, everyone pays different real estate tax. But the maximum is now up to $2,820, which is awesome. So if you could qualify for the max, it's great. And then if you can get the match through the town of Wayland, you're up to $5,600. I mean, it's pretty significant, right? Pretty good. There are some income eligibility amounts that we need to talk about. So on the right-hand column for 2025 tax year, if you're single, your total income must be less than $75,000. Okay. And when I talk about total income, that's kind of always which is good, it's a question. It's going to include your bank interest, your Social Security benefit. The state never taxes Social Security, and we're not going to begin, and we're not going to tax your Social Security just because you get circuit breaker if you do. But when we're trying to determine, does someone need help paying their real estate tax, we need to look at their total income to see if they're in need of paying their real estate tax. So for that reason, we're going to add bank interest, Social Security. Maybe you take a withdrawal from like a 401k, okay? Or you have some other source of income that you realize that you're getting, that you're living on, right? So all of those statements should have been pouring in the past few weeks. By law, you should have those documents by February 1st. Sometimes they come a little bit in the next week. Some financial institutions are providing that information online. So, everything's going online, right? So maybe before they would issue a 1099 for interest. All of those places, they want to get away from the mailing and the paper, and they want to have you look at your bank account and get the bottom line. They'll provide you what your interest or what your distribution was or what your capital gain was for 2025 electronically, because you have an account with them. It's nice if you still, in some places you can opt, you can say, I still want the paper, 1099. I don't necessarily want to be limited to the online information. So back to the eligibility income amounts. If you're married filing with your spouse, the qualifying income there is $112,000 for the year. Some folks file as head of household, and if you do, head of household would be someone that has a dependent person living with them in their household. So you have a dependent relative, you have someone that you're providing more than 50% of their financial support for them to live, okay, to get along. You're supporting them basically, right? If you file as head of household, maybe you have a grandchild or someone like that living with you, then that qualifying income is $94,000 for last year or less. You've got to be under 94,000 in order to be eligible for this credit. The other thing we need to talk about is the assessed value of your home in Massachusetts and the assessed value of your principal residence in Mass for 2025 could not be greater than $1,298,000. Okay, it's good. I think it's realistic. It's because the legislature is aware of it, and you can see the increase over the past few years, how they've kind of increased that. It's not the amount that the real estate agent tells you that they could sell your home for. That's not the amount we're talking about. The amount we're talking about is the assessed value of your property with town hall. It should be on your tax bill, would have your assessed value amount, right?
Dear.
Oh. Thanks for coming, everybody. So again, your assessed value has got to be under $1,298,000. The other issue related to that is that there's a little bit of a limitation on if you have more than 1 acre of property, the real estate tax that you pay on your home, together with 1 acre of property, that's the amount that we're going to work with to determine what your credit's going to be. If you have greater than 1 acre, the real estate tax that you're paying on more than 1 acre is going to be discounted. You can't include it in the formula. Okay. If you need help to try to determine, sometimes people say, well, I have 3 acres of property. Like, how do I know how much real estate tax I'm paying on my home plus 1 acre of property? How much do I need to back off because for the other 2 acres? The assessor's office could help you with that. Is that true? I think. Okay. So the assessors in town at town hall can help you with that calculation or to determine how much real estate tax you've paid on your home plus 1 acre. And it is only based on your principal residence in Mass. Sometimes people ask me, I have another property in Florida, I have a vacation place in New Hampshire. I pay real estate tax there too, but unfortunately, you can't factor in the real estate tax that you're paying outside of Mass. This is limited to only Massachusetts residents. We do have people that pay Massachusetts income tax, but they live out of state. So some folks live in New Hampshire, but they come to Massachusetts to work. They would not be eligible for this. It's limited to Massachusetts residents, okay? The formula is really pretty straightforward. Other thing I just need to include before we get into our math equation. You're able to include half of your water bill with your real estate tax.
It's gone way up.
It has, right?
Sure has.
And that's why really this, I'm glad you mentioned that, because that's why this credit is in place. Because really, generally people over 65 are on a fixed income, but we all realize that our real estate tax and our water bill continues to go up every year. So that this credit is in place through the Commonwealth to try to offset that and try to provide some relief. And that's where we get that circuit breaker analogy, relief, right? So add half of your water bill to your real estate tax. It's going to try to beef up the credit for you. Everyone should have a pretty good idea of what your income is like. Doesn't have to be exact. Ballpark is fine. When you go home, you could even look at your last year's tax return to see basically what your income was last year. And what you're going to do is take 10% of your income amount, whatever it might be. So again, you're going to include your bank interest, your social security payment, for the year. You're going to add your 401k distribution, whatever you've got, right? Maybe you have some dividends, some capital gains. You're going to bundle all of that income in with the equation for circuit breaker. We're going to take 10% of that amount. This credit is in place. It's going to help someone out when their real estate tax, together with half of their water bill, is greater than 10% of their income. So let me just throw out a number just for demonstrate the purpose, right? Let's just say, for instance, that my income, when I add everything up, is $50,000. So I qualify because I'm under the eligibility amount. I'm single. I'm under the 71,000. Is it 70? It's terrible with these classes. Oh, 75. Okay, yeah. So I'm eligible. My income's 50,000. I'm going to take 10% of that, $5,000. And I know it's not. It's very, very quick. It's very easy for your real estate tax and half your water bill to be more than $5,000. So it's kind of a simple calculation, but just demonstrates the point, right? Whatever amount you're over that 10% factor of $5,000, and again, I just picked a number out of the sky, right? Everyone has different numbers. Whatever amount that is, up to $2,820, that's going to be your circuit breaker credit for 2025, okay? Maybe you have $70,000 of income. We take 10% of 70, we're at $7,000. I like to think of 10% of the income as like a break-even point. If this is going to help you when your real estate tax and half your water bill goes over 10% of your income.
Oh,
This is when you wave.
yeah.
We're in the dark. Yeah, but,
We're not. There are applause to new buildings.
you know, I've talked to some people along the way that, you know, when I maybe at the end of the presentation, they said, just want to double check that I heard you right. Like, is this my numbers? And I'm happy to do that today if you want to hang around. I'm not in a big rush. I'm not going anywhere. If you want to run some numbers by me, some people say like, oh, I came close, but I didn't. It's my real estate tax and half my water bill is not greater than 10% of my income. And I said, oh, okay, well, I guess you have the resources to pay your real estate tax, which is good. And then maybe it didn't work for you this year, but maybe down the road, as we talked about, we're on a fixed income, but our real estate tax and our water bill is increasing every year.
I
So-
found that.
Excellent, good. Okay, so maybe down the road, it'll work for you, and it's nice to have an awareness of how to benefit by it. First thing is AARP, free tax preparation here in the center, and they're very familiar with this. They'll go over it with you.
They will also have your property taxes and your water
Wow.
bills.
Oh, they have access to that.
We are prepared for Wayland residents.
Wow, that's excellent. Good.
Between the assessors and the treasurers, spot on.
I don't know how much more you can do for them.
And you get the acreage. The
Wow.
assessors give us the acreage.
Oh, that's awesome. Wow. Wow, that's terrific. Can I make an appointment with you? That's great. Good. That's wonderful. I should mention that actually, any questions on what we've talked about so far? And again, I'm going to be here. You can talk to me one-on-one after this is over. I'm happy to do that. We should mention that people that pay rent in Massachusetts, they are eligible for the credit as well. The idea here is that part of their rent goes to pay real estate tax. It's kind of indirect, like you have a landlord, but whatever you're paying a year in rent, a portion of it is going to pay the real estate tax. So in that case, the idea is generally the same, 10% of the income, and then we're going to look at 25% of the rent that someone's paid. If 25% of someone's rent is greater than 10% of their income, it's determined, or it's kind of understood that that's becoming a burden. That is 25% of someone's rent to become more than 10% of their income, or even more so. It gets a little bit difficult for people to handle, and that's why it's available to renters as well. The only stipulation with renters is that the rent that you're paying cannot be subsidized. There's no federal subsidy or state subsidy or religious organization, because the facility or wherever you're living has to be paying real estate tax in order to benefit by the credit. Okay. I guess also the idea is, like, if you're already getting a discounted rent by living in a subsidized rental situation, you already kind of have an advantage there. And then this would be kind of like real double dip, or like kind of jumping on that. Okay. We have a lot of resources available at the DOR. We're big on the website as well. That if you go to our website, which is listed at the bottom of the page, and in the search field, if you just type in circuit breaker in the search field, you're going to we have a video that you can watch that we put together. We have other resources available. We have the numbers like this that you're looking at. We have information that if you put your property in a trust, you're still eligible for the credit. Just because your property has been put in a trust, it doesn't mean that you're no longer eligible for the credit. There are different kinds of trusts that people do. Some people are trustees of the trust, other people are not. So, like, the particulars, and it's spelled out in the document that you would see on the website. Another option that you have is you can call us at the 800 number, and we'll be happy to talk to you about the credit and kind of walk you through if you need a little bit more assistance. Tax people, we love forms. And we basically have a form for everything. We do have a form specific to circuit breaker. So you can see on my handout, I mentioned here Schedule CB. Schedule CB is going to be part of your tax return, your Form 1, that you do every year, that you've been doing on April 15th or before for years. So now, if circuit breaker is going to be something new for you, you're going to be your return will now have Schedule CB attached to your return.
The CB stand for circuit breaker.
Bingo. Yes, exactly. So if you're curious, did I get this credit last year? Like, it seems like I'm eligible, and from what he said, I think my numbers kind of work. What I would suggest you do is go home and pull out your 2024 tax return and look at your return. Number one, on the regular tax return on line 44, if you have an amount on line 44, the credit is as part of your return. Like, if you had a tax professional do your return for you, and you say, did he do that for me? Did I benefit by that? Look at line 44. The other thing you want to look at is on your last year's tax return, you would have that Schedule CB as part of your return. Because Schedule CB, again, is we're going to walk you through on the schedule. We're going to walk you through to determine exactly how much is your credit and how much yours was, perhaps, right? So the way the schedule is set up is the income, right? Take 10%. What did you pay in real estate tax? Add half your water bill. Is your real estate tax and half your water bill greater than 10% of your income? Yes, it is. How much? Whatever it is, up to the maximum for 2025 of $820. So pretty significant. And I would expect an increase we'd see for what we had next year, and we have the numbers for 2026. I would expect an increase again, because you can see over the recent years that it's been increasing. The reason why I have these prior years on my return, on my handout, my return, one way, one focus, but on tax returns, but on my handout, the prior 3 years are still available to people. Sometimes people come to a session like this and they've never heard about circuit breaker. It's new to them. And they say, wow, I do qualify for 2025 and I've been 65 for many years now. Can I go back and take advantage of the past years, right? Because I said it's been around for 25 years. The state is generous with this, but to a point, right? So it's only the prior 3 years are still available for people. You can go back and take advantage of benefit but for 24, tax year of 23, and tax year of 22. When the cutoff is the due date of the tax return. So when I'm here next year with my numbers for 26, and we're together next year, 22 has dropped off of my handout, no longer there. But I've added my numbers for 26, right? So sometimes people say like, wow, I didn't realize this was an option for me. This is pretty good. And I say, well, I don't want to have anyone miss out. If you could benefit for tax year 22, you need to address it by April 15th coming up. That's the deadline because it's from 3 years of the tax return, the due date, right? So please address that. The AAR people can help you not only with the current year, but the prior few years as well. Yes.
The maximum credit in 2022 it seems to be a misprint.
Why is that?
Well, it says 1,1200. And I just wondered what.
Okay, so the maximum credit in tax year of 22 was 1,100 and, oh, I have an extra,
Yeah.
I'm sorry. Okay, sorry about that. Thank you for catching that. I'll fix that. Okay, that's good.
I've been an editor most of my life, so I
Oh,
catch these.
excellent. Oh, okay, good.
Right.
What is the maximum credit for 2022?
$1,200.
1,100.
I'm sorry, 1,000,
120.
1,120, yes.
1,120.
Yep.
Okay, got it.
Could we just interject one thing?
Yes,
about-
please. Yeah,
You can go back 3 years on the state,
yes.
but I'd like the assessor's office to say about the town match.
Right, so the town, you can't go back past the current year for the town to match that. You could get the credit on your taxes, but the town will only deal with the current year.
By all means, go back 3 years for the state. Okay.
So different due date. Right? The town has a different due date than the state. Which is
or
okay.
April 1st.
Okay, April 1st. Okay, good to know. So if you do get the circuit breaker for this year for 25, you need to come to town hall and apply for the match through the town of Wayland by April 1st, right? Is that the,
Right, but so fiscal 26,
okay,
which we're in, we're looking at 2024 tax return.
okay,
So that's what will be due April 1st.
okay. So if I were a resident in Wayland, I would come to town hall to apply for the match with my 24 return.
Exactly.
Okay, okay, oh, I see, okay. Good to know, thank you. Other questions?
So is he talking about this year and going back to 24? So for this year, for 25, you should be asking on the year after, 27.
For the circuit breaker application that's due April 1st, coming up, which is for fiscal 26, we use 2024, calendar year 2024 tax return, which you would already have. Right.
Thank you.
Oh, good. So you don't even have to wait to get your 25 returns on because you already have
So, right,
24.
so when you do your 2025 taxes now, you'll hold on to that for the next year's application.
Excellent, good to know, thank you. Other questions or things we should mention? Okay. All right, So pretty straightforward, right? It's not a big deal. I mean, sometimes we mention taxes to people and they get a little, no one likes it. I don't either, but you know, what are you gonna do? Gotta do it. So I'll turn it over to the town assessor at this point. I'll just slide out of the way.
Can I ask one question?
Of course.
My wife and I have been doing circuit breaker tax credit for several years, and
Yes.
in the last couple of years, we sold our house.
Okay.
So we have used this formula in the past, but what I'm a little bit curious about, my question is, where we're renting now, we have to pay to park, we have to pay for storage. Are those all included in,
If it's itemized, if
25%.
you pay a separate storage fee or a separate parking fee that's not lumped in a part of the rent, then no, it wouldn't be included. But if you rent whatever it is per month and they tell you it includes parking and you have storage too, and you pay one amount, but if then you could
we get an itemized bill every month?
Yeah, because, you know, it's possible that you could get the dreaded letter from where I work to ask for more information about to justify,
Yeah.
especially when people come forward and they're gonna claim a circuit breaker credit for the first time. For them, maybe this is the first year they turn 65, and this is the first year that they're eligible for circuit breaker. We question those a lot. It's really an anti-fraud tool that we use because unfortunately with taxes and refunds, there's a lot of fraud activity, both on the federal side and by the state side. And anytime that there's money going out the door, it's not anytime, but like with tax credits, it's really money it's not withholding from your job, like when you worked and you had tax withheld, or you made estimated tax payments. So it's not payments that you made, it's money that you're getting from the state or maybe from the federal government for some other type of credit. So for that reason, the credits can be questioned. So don't be surprised if you get the dreaded letter. Yes.
I have yet another question. Why is it called circuit breaker?
It's a good question. Someone thought of the idea, and this credit's been around for 25 years. Massachusetts is not the only state that has it. I think the person that developed the concept is, they use the analogy of an electrical outlet when it's burdened or when it becomes a little bit overwhelmed, that the circuit breaker is activated or tripped or engaged to provide some relief for the electrical outlet. Kind of a stretch, if you ask me. Like, I don't really.
That's so weird. I just.
Yeah. It's a little confusing too, because sometimes when you Google circuit breaker, there is a credit in Massachusetts related to education, like related to schools. So sometimes when the school budget is short or overwhelmed, there's a provision in the state budget to provide assistance for towns that are kind of in trouble with their education budget. So it's a little confusing, but I really wish we could just rename it. It's kind of crazy.
A year does not go by when someone doesn't call and say, I have circuit breakers at home. Am I eligible? You know,
Especially
understand.
if you had electrical work done recently, right? I mean, because I'm sure that's expensive too, like everything. They'd be like, wow, maybe I could get a little credit for my new electrical system.
Just thinking out loud.
Okay. I thought she had a question, but okay. Again, I'll be available, and I'm going to turn it over.
So my name is Tamara Keith, and I'm the assistant assessor. And this is Stephen Foley, the administrative assessor. And we're here to just briefly talk about the exemption programs that we have, the tax relief programs we have that we administer to the assessor's office. And this is brief. We have applications with us that are more detailed. We are always available for phone calls. You can come to the window, ask questions. We can look at the applications together with you. So a few notes here. So We have a couple different types of tax relief programs. One's the statutory exemptions, which are codified by Massachusetts law. So it's Massachusetts General Law, Chapter 59, Section 5, to be exact. And these are unfortunately kind of stringent income and asset limitations, generally speaking. However, Wayland voted years ago to increase the state assistance amounts by 100%. So we're basically matching what the state has offered. I mean, we've been doing that for years. So, so these are exemptions you have to apply for every year. The burden of proof is on the applicant to show that you qualify. So you would submit an application, and very often we'll contact you for more information. For instance, your tax return, your federal or state, or maybe your 1099 or other documents to show supporting documents for your application. The deadline every year is April 1st, unless it falls on a weekend. So it's the next business day. This year, I don't know what day of the week it is, but it is a weekday. So April 1st, we need the applications by 4 o'clock on the 1st. Then they can be postmarked if you prefer to do that, rather than bring them in. So we have 5 statutory exemptions, and one of them is a deferral. So the first one I will talk about, oh, well, actually, let me say, yeah, so I just want to say, so the statutory exemptions are kind of stringent in their limitations. But the town adopted programs such as the Circuit Breaker Match and the Community Preservation Act exemption and the senior tax work-off augment the statutory exemptions that are, again, kind of stringent. So one of the 5 statutory exemptions is the clause 37, which is a blind exemption, reduces local property tax liability for those taxpayers who are legally blind. There's no age or income or asset limits, and the assistance amount is $875. And you need to apply each year and own your property as of July 1st of 2025, which is the qualifying date for age as well, like across the board for all the exemptions. You need to be 65 or whatever that particular exemption is asking for. There's the senior exemption, which you need to be 70, and that would be by July 1st of 2025 for this fiscal year of 26. Then we have the veteran exemption, which is clause 22. You need to be a veteran, a disabled veteran, or a widow or widower of a veteran with a service-related disability, which would be from an injury or illness due to active service in the military. And the assistance ranges from $800 to a total tax exemption for instance, a paraplegic due to active service. And then Massachusetts recently passed or augmented the HERO Act, which in our office, we administer an abatement for excise tax for veterans if they are 100% disabled. So that's something new as of last year. So we've reached out to our veterans in the community to have them apply for that, which needs to be applied for every year. And again, this is just a real cursory discussion, because they're, for each one of the veteran exemptions, they're real specific, you know, things that you need to qualify in terms of ownership and being a resident for a certain amount of time, for instance. So we can answer questions, or, you know, we have the applications as well. So, and then there is clause 17D, you all have a sheet there in front of you. So that's for a surviving spouse. We call it the surviving spouse exemption, but it's for a widow or widower of any age that meets the other qualifications, or a senior over 70 as of July 1st of 25, or a minor child with one deceased parent. And there's ownership. There's an ownership qualification. You need to own and occupy your property for 5 years. Income is not considered, but the assets cannot exceed $40,000, which is not including your domicile. So again, kind of stringent there. Clause 41C is the elderly exemption. Oh, I'm sorry, and that the assistance amount was $350. Clause 41C is the elderly exemption, and that is $1,000 of assistance. You need to be over 65, own your property for 5 years. The income is, if you're single, cannot exceed 20,000. Assets cannot exceed 40,000. Married income cannot exceed 30,000, and assets cannot exceed 55,000. Your income, so the state allows the Social Security allowance to be, which is set each year by the state, to be subtracted from your income. So that can be helpful if you're on the line of qualifying. And then we have the 41A, which is a tax deferral, and you can choose to defer a portion or all of your taxes. And so it's a deferred, so you're going to have to pay that back. There's we charge 4% interest.
Yeah, on the 41A, Representative Michelle DiCicolo, she has a bill in and it's going 1 year. This is the furthest it's ever gone. I guess it takes 2 years to complete it. So the thing is there, when somebody dies, the family has to pay 16%.
Yeah.
So that's what the bill is about, not having that they would continue with the interest, you know, if they sell the house, you know, up till the time they sell the house now it's 16%.
Right.
And then it would be changed when the person dies, it'll go back to the lower percentage. So it's a big plus for the family. How can somebody sell a house the day somebody dies? You
Right.
know, rather difficult and emotional.
Right. Yeah, no, I know. That's a big jump in
So there's
interest.
hope that will.
That's great. I hadn't heard that. Yeah, so we have a couple folks in town that have taken advantage of this, but it is, you know, something that you have to pay back with interest, and the town places a lien on the property and is recorded at the Registry of Deeds. And again, if you have any questions about this, I can answer them. And then we also have a clause 18, which it's more of a stopgap, temporary hardship. So for those that can't meet their real estate obligation due to being called into military service, or you're over 65 and have a physical or mental illness, disability, you can receive a partial or full exemption at the discretion of the Board of Assessors. So this is the only program that is at the discretion of the board. Every other exemption, you either qualify or you don't. But this is something that we would discuss and you'd present, supporting documents, and you talk to us about, what's going on. And then there's a 18A deferral, which is more of a shorter term deferral. And this is for a taxpayer of any age. There's no age limit. And where you're struggling with unemployment, illness, disability, or you're called into military service. And it's available for up to 3 years, and then must be repaid beginning 2 years after the last year of the deferral. And that would be at the same interest rate, the 4%. And then we have the town adopted programs, the senior tax work-off, which many participate in. And it's administered by the COA here. And it runs from January 1st to November 15th. And where you work in one of the municipal departments. We have somebody working in our department right now, and you work for minimum wage, and you can work up to 125 hours. And I have heard that it's beneficial to apply sooner than later, just because positions can't necessarily be guaranteed throughout in the town. But any more questions, you can talk to Julie or anyone else.
Just call
here.
the COA.
Yeah, call the COA. And then the CPA exemption, which relieves your your Community Preservation Act surcharge on your tax bill. So it's kind of a lengthy application, but that we ask for your federal tax return to be included with that. And the income guidelines are more lenient. And there you can subtract your medical expenses from your income, Social Security deduction from your income, and what else? And yeah, I mean, it's not a huge amount, but it's something else. Every little bit helps. Then again, you have and there's no age limit with that.
Is the Community Preservation Act, is that a set amount for everyone, or is it like a prorated kind of thing?
It's
Mine would be different than yours based on my property.
It's a percent. Yeah, it's everyone's different based
Okay.
on your assessment.
Okay,
Your assessment minus $100,000 times the tax rate, and it's 1.5% of
okay,
that. So it's going to be different for everyone.
thank you.
And then circuit breaker match, as we've discussed. And again, our deadline is April 1st, and we are asking for calendar year 2024 tax return. Most people bring in just their Schedule CB. And if we need more information, we'll ask you. The first 2 years that you apply, if you're a first-time filer, we ask for your state income tax return to accompany the application. And as we heard, each year the income guidelines and your assessment limit
Yeah.
or amount
Yeah.
changes. So, and we send out applications, the assessor's office sends out applications the end of August every year. So these are a courtesy. We don't necessarily have everybody on our mailing list. So if anyone here would like to put their name on our mailing list, we'll send you whatever application you're interested in each year in August, which is kind of early when the due date is April. So some people ask for us to send them again. Can get lost in the shuffle, but and is there any question about the circuit breaker match? As we talked about, we don't go back in time in regard to the match. But, yeah, I think that's been covered. And, yeah, I think that is it.
Thank you so much. Thank you.